Okay, so this is actually going to be the recording for the trade review for Wednesday, July the 15th, 2026. Now, we did have a discussion on the Discord, which was actually pretty good. So the next one, I just had some space issues with the computer and just different things. But the next one will be with those Discord members as well. And I think their questions were really good, and it kind of helps define more of the edge and some of the things we want to see on 15 5 minute, and then um, also kind of cleans up some of the areas of like maybe you were thinking this here, but this is actually what we should be thinking. Okay. So I'm going to keep it a little bit more short here on this one. I'll go over our higher time frame bias, what we wanted to see on dollar, pretty much what we wanted to see on um, SPY, QQQ, what I was looking for, a little bit on gold. I won't cover as much gold today, but I'll focus on DXY, futures and indices, right? So, and then a little bit of oil, okay? So first off with dollar, we've been looking at this as like a massive accumulation and seeing price break out. And then as we started to approach the 102 level, as you can see here, price kind of like what I always say, noobs buy tops and sell bottoms. So as price is breaking out, they're trapping buyers that should have been buying at lower prices to buy at a higher price as buyers are liquidating their positions, right? So we are starting to see lower low, lower high, lower low. If you look at line graph, we're starting to see that. And so what we were anticipating with seeing some liquidation on dollar is that anything XXX USD, right? So like when I used to trade Forex, like your Euro USD, your GBP USDs, when you're gonna see a down dollar, you're gonna see up days on like things like pound and things like Euro USD. And then of course, as I moved into like indices, right? So NAS 100, your SPX 500 or your US 30, those are your indice prices, right? And like terms and labels, and then your futures prices, right? What we always trade every day here on the sessions, right? So if you're going to have a down dollar, a lot of times you are going to see some bias in those futures positions. Okay. Now today, when you look at futures, obviously we had a down day from New York. There was some bounce plays to play, and then the second half of the day did present a nice buying below the open condition situation. Okay, so we did want to see this, and then we did overall because if we start to fill this 100 psychological level, we do think that we could start to reclaim price in this area to then continue higher if they can hold this weekly demand like trap candle area. Okay, so essentially what I'm saying is it's like they come down on that weekly and go like this and then start to make their way up, that might be what takes us to 102. Okay, now if buyers start to liquidate and price starts to break lower than here, right, like on a line graph, if you're looking to the left here, it goes lower than this low, then I would be anticipating either something that holds and goes like this, or I'd be anticipating something that goes like this and then rolls back over and takes this low and starts to move down. Okay. And so just watching this area and really trying to see what price is going to present. But as of right now, that's what I was looking for. Okay. So now going over to the 4 hour for direction, what we were wanting to see when it comes to YM being on the far left, ES being here in the middle, and then NQ being on the far right. I really work with understanding where short covering is going to happen. So when someone shorts in an intraday move, where is it most likely that they're going to have their limits, right? So they're take profits, so they're going to be at liquidity grabs, or they're going to be inside the range. Where are they going to be in the range? And a lot of the times I've come to find out that those areas of supply demand and these areas that I identify are the exact areas where you're going to see these type of reversal plays if you align a couple other nuances. And so me personally, ever since we slipped the low from Wednesday, July the 8th, 2026 on YM, I've been watching this candle and just kind of anticipating, that this is a demand level and that anyone that keeps shorting into this, they're covering their position because price isn't capitulating and going lower to the key levels. And so what's causing the massive push back up and pricing to hold inside the demands like 52 600, 52 650s, like 52 700s, is what's causing that is because shorts are failing to get the move down and buys are being able to be filled, and then the buyers are just taking over the market. Okay, and comparative strength, it looks relatively strong across the board. Now looking at the 1 hours, what I was wanting to see when it comes to that, like I said, I showed the price here. When it comes to ES, what I was wanting to see in the beginning, like an NQ, was potentially a move down, right? Like for NQ, I remember I was thinking about possibly seeing a move down to fill the FEG at 29,830s, or possibly get back to our typical level, last down candle before the up move, which becomes a upside. It is very high on the range, right? That's why it says way past the 50% of the range, but it does become an upside discount slash demand area that you have to respect and see what's going to happen in that area. Okay. Now, I was anticipating that we could move down to my green level, which was another bigger key level, right? 29,500. And then also in alignment with when I go to 4 hour, 1 hour NQ. If you can see this fractal picture, this is a 4 hour demand candle and discount area. And then if you look over here to this right screen, right, all I'm showing you is that this is the 1 hour zone that's also in alignment with the market open. So when we see shorts cover, right, shorts had got in from New York, which we'll break down New York, and then why we didn't take the shorts, and then what we were able to find, and then the second half of the move of the day. Okay. And so shorts did fall from New York. This is basically New York Open here. And so shorts did fall down to the demand and at 510 points. Now guys, those shorts were amazing. I'm going to show those on 15.5, 1 minute, and how they kind of formed. And they did have pretty clean targets to get down into inside these ranges. Okay. But when you see individuals short a position like that, you got to understand they're looking for a couple things. They're looking for price to either continue to go, right, and take out that previous day low liquidity where they have their buy limit set on old lows, or they're emotionally seeing price go back against them, like on a move like this here at 12 o'clock, right? And as it starts to push against them, they say, you know what, I can't take it anymore. I'm actually losing. I'm about to start losing more than what I've gained. Okay, because like not everyone's getting the move up here at New York Open. Most players, I would say, are probably playing somewhere like a 29,850, or they're playing the breakout after the for sure low of day break. They're selling here, right? And price kind of just falls down. And then they're forced to probably take a partial. If they don't take a partial, then if they're still kind of new, price will give them all of this and then take it all back so fast with that one candle that's what makes them emotionally start to cover the position. Now, most people don't know what high and what low is. So a lot of times they're also selling at what I call the low end of the range, and they sell in a position like this, and then this one candle can, so they sell basically here at the 11 o'clock candle open. Price goes into a higher time frame demand. They have no idea that they're already a part of a functionality move. Because think about it, like the individual who shorted here, they have to get out. They don't have to get out, but most likely, let's ask yourself this: if you're up 500 points times, even $4, you're up almost $2,000, right? So is that right? Yeah, $4 every 100 would be four. So 4 times 5 would be, yeah. So you'd be up $2,000, guys, on across one account. Let's just keep it linear, okay? Like on Top Step, and so that's what I identify as short covering, okay? And so to see price fall down into that area, that was really sweet. And then this was the bias that I wanted to see as you go down to smaller time frames. Now, let's go over to, let's see, 15.5. So let's break down New York really quick. And then let's break down the buy that we took after the fall. And then we'll talk about the second half of the day position that was on CFD, okay? Now, at New York Open, a lot of times in the first 15 to 5 minutes, I'm looking for a couple specific things, but I'm also not looking to force my way into any type of trades or any type of setups in those first 15, 5 minutes. I don't have to be in something. I like to let that dust settle, and I was actually looking for the shorts. I'll show here on the 1 minute here in just a second. Let me make sure I pull that up. But I just wasn't really confident on the price action. So like for me, I like things that almost feel like a layup instead of like even a free throw. A free throw is really still pretty testy. Okay. So let's pull this over here. So okay, so when you're looking at 15.5, location framed up really well. And even pre-New York, I was saying that there's a good chance that, what was really key was that 7:30 news, right? If you go back and you look at the news, the PPI data came out at 7:30. I like to never really play my futures position until the equities open at 8:30 Central Time Zone because the dust is settling still from the 7:30 news debacles, okay? And so when you go back and you look at the when you go back and you look at the 7:30 news, that's what I identified with this yellow pricing. So essentially, this candle's open was that 7:30 news. So they pushed the price up pre-equities, kind of showing like a break of structure and signs of strength. but at the same time, they're setting people up for that equities open. Now, at the equities open, right, we're in a 15-minute supply, right? We had a sign of weakness, and then the 8:15 to 8:30 candle, right when this candle closes, started to show weakness, like it wanted to come back and fill fair value gap between 29,800 and 29,837. So this gap right here, and then of course this was our demand candle and our low of day all in one spot. So we're watching this for potential short covering from a New York and from the overnight trader from London, right? Because this is actually the 2 a.m. London Open, and most of these individuals who have been short all night, right? They don't usually sell in this type of zone. They usually sell probably somewhere like here, and so this scared them. You get what I'm saying? If they sold right here around like the 2 a.m. or 2:30 a.m. price comes down, starts to show them some love, right? And then in this 1 to 2 candles, like if you sold like right here, it's come back up on you and made you nervous or made you get out, right, and give your position back. Okay. And so I've seen this. This is why I talk about overnight trade. You just want to let it play out. Now, when I bring up the 1 minute here really quickly, right, and you can see this 5 minute price, the very first 5 minute candle, right, 8:30 to 8:35, that's the candle you get. This is what I call a Darth Maul candle. If you guys have ever seen Star Wars, Darth Maul has a sword on both, a lightsaber on both sides of one sword. Okay, that 5 minute candle, that's essentially what that is. Now, in this next candle, 8:35 going into 40, I'm really like critical in those first 15 minutes of the open, and then I like to take trades in the last 15 minutes of an hour, so like after 8:40 to like into 9, and then like 9 a.m. to 9:15. Okay, I also like 9:30. It's a really good time, like right on the dot, like right around that area. There's lots of algorithmic reversal times in those areas. Okay, as long as price action is presenting. Now this candle 8:35 to 8:40. Let's break this down. This was really nice candle. 8:34 would have been this candle here to 8:35. So this is all you could basically see. And then you get 8:35 to 8:36. You get the lower low. So as soon as you essentially are reading price like this, right? Like you have no idea what's really going to happen here. But then when it gives you this next lower low like this and rejection away from New York, now essentially on a 1 minute, I'm thinking, can I get an order inside supply like 29,940s? And have my risk no higher than 29,966. Now, the reason why I didn't take shorts, I'm a weird or not weird psychological, but a superstitious person, and I was looking at like if I take my risk here, I was going to be putting my risk on a 666, and I just personally don't want to do it. And so that's just a numbers thing when it comes to trading. And so it did kind of come back up and fill this area, I believe. And then it tilted to the downside. So you wouldn't have had to have a 666 risk either, I would say, on this. Let's look at what that risk could have actually been just into that candle. So let's say you had the 940s, like I said originally, and you had a 1 to 3 sell. So you could have had still like here, but I like to use edges, right? And so it would have never filled my 946 fill price to give me that edge of whatever that high would exactly been. That high exactly was, let me look at this. The high exactly is 966 and a quarter, so I guess we could have accepted that, right? But it would have never really filled that area where I wanted, which was like 945s. But like I said, this was still a pretty good price. And then say you were taking the trade in those 924s, putting your risk in the 44s here, I think that's still a pretty good trade to attack these data lows, right? In the 29,850s. Now, again, like I said, I personally did not take that trade. Give me 1 second here. I forgot to cut the ad off here. Of course, once I reach back, it switches. Okay. So going back to the 15 and 5 here, really quick. What we're waiting for once price just capitulates at an opening range like this is I'm not gonna force my way into a short just to get a position. I want to focus on execution, location, of the candles that I want to frame my trades and edge around. Okay. And so for this at this point here, going into the 845, excuse me, going into that 845, this was 840 or 835 to 40, and then 40 to 45 candle breaks the structure. So essentially what you're seeing here at this point, right, is price is clearly bearish, right? The opening range 830 835, then 835 to 40, and then 40 to 45 you're getting lower lows, right? Clearly showing you signs of weakness. Now, for me, when I'm looking at this, what I'm thinking is like, okay, I'm not gonna just take, a random trade. Something I've been talking a lot about is let's not buy, don't buy a falling knife and when you're looking for certain shorts, like when the price just feels like it's getting ready to sell off or something like that, don't try to guess the top, right? Still use the criteria, still use the price and time tools, okay? And so for me, we fell down. This was 45 going into 50. And obviously, like I said, I love to take trades in the first 15 minutes of the hour or the last 15 minutes of the hour. And so price right here at 45 to 50 is still showing signs of bearish. So at this exact moment, if you're looking at a 5-minute price, there's nothing to play here. Okay. Price is still capitulating over. Price is like when you're looking right here at this exact moment here, it's basically like when if I was like put a little tool for you to kind of see exactly where it would be on the price right here, right now, you can see that's where it was, right? It's inside the 15-minute demand. Now it's printing below the daily open. So this is what people don't understand, what's high and what's low and where shorts are going to cover. Demand is a real thing because you got to know where those intraday, those 1 minute, those 100 tick players are going to cover their position based on their locations, okay? And so for me, I'm already starting to anticipate short covering or buys, like right from this position, because individuals, if you think about it from this line here to this line here, are already up 100 handles. So the way we do this, we risk 20 for 100. That's 5 times our risk right there, right? On a trailed risk trade, if we would have shorted something like that, okay? So just have that perspective of like other players, okay? Now, when you look at what we were looking for was 850 going into 855. That was the magical time for me, and I'll go back now to the 1 minute and we'll go look and dive into what I was seeing there, okay? Because I wasn't in shorts. Now, when you look at the 5-minute sign of strength, these are certain things that I talk about every day on stream, these specific signals, right? 5-minute sign of strength, then start to identify your target, think from risk to entry, and then I teach exactly how much you want to risk on NQ and ES. Now, the trade that I gave out on stream today that we ended up banging out, now we ended up banging out a 5+R trade like you'll see in the thumbnail. But we didn't have the right direction on the overall day, which was fine, right? You don't when you're trading from a carefree state of mind or risk reward standpoint, you're not worried about being right and these other things about being this specific winner. You're just worried about executing the plan that you have specific for you. Okay. And so 5-minute sign of strength under the daily open. I love to buy below daily open. I like to see sales give back their position. So take profit in these areas so I can be on the same side as the market. And so after the 5-minute sign of strength, I'm thinking where's my target? Okay. So at this exact moment here, I'll kind of show what it would have looked like on the 5. Right here after this 5-minute sign of strength, right? When I draw my line down, I think where's my target? New York highs was my target. Okay. And then I draw this line down the middle. And we talked about this, like I said, on the Discord. Okay. Now, after I draw that line and the second 5-minute candle, there's a couple other nuances, but like it's a lot to go over. But in the second candle, if price is still giving me higher highs and higher lows, like on a 1 minute time frame like this, and it's playing below daily open, I'm going to play my edge. I don't even have to think about it. Okay. Now I have preset areas that are preset risk rewards for these type of setups. So basically, you're just going to come in and be able to already have the 20-point risk for 60 or 20-point for 100 so that you can think in those R multiples, okay? Now, me personally, I was giving out the trade at 853 going into 854, and I liked 777. So my entry ended up being 777. I had a 20 handle risk, right? And I was looking for a 100-point gain, just a little push back above those 882s, right? I was just looking for it back up to that news price where people had bought before and got crushed, okay? Now, I was wanting possibly New York highs, but I also was looking for not much more than a 5+ times our risk for everyone on the stream, okay? And so when you look at this, now this was the aggressive entry, right? Like what I'm showing you here, right? Playing it down here. And then the conservative entry is what I'm going to show you next, okay? Which is going to be the 5-minute sign of strength closed and then play the candle, the second candle, no matter what, with 20 handle risk, okay? So how does that one work, okay? So you have the 5-minute sign of strength, then you have the daily open, right? You're trying to buy below opening price in bullish conditions. Now you would have taken on some heat for sure, right, with this one. But price was, if you think about it, making higher highs, higher lows, higher highs, higher lows to scale up to that next level. Okay. And so it was, I mean, as soon as you would have got in, it would have pretty much been a no drawdown situation, even after the 5-minute close. So this was the 5-minute close, like right in here. Okay. And so bam, the candle closes, and then this is the next candle start. So let's say you would have been buying literally right here with a 20 handle risk, right? Basically buying the key level, right? 29,800 with a 20 handle risk, playing just to get the breaker structure or the fair value gap fill on 15.5, okay? And so, like I said, we took our trade down here. I said it was more conservative, but still a great trade to play to up here. Now you don't have to play because I got in 777s, right? So you don't have to play for the 1 to 5s. You could also play for 1 to 3s, right? Those deliver a lot more, right? They're a lot less to ask for, and they're going to keep you profitable. Now, this was a trade, like I said, that I took personally, and people followed along and took with me, okay? Which was this one. Okay, I got in, like I said, this was 9:05 or 9:07. You guys can see the time. I told you we had the push up candle right here, right, engulfing on that 1 minute, right after that. Yeah, engulfing 1 minute, and then price comes back down in that 53 candle, struck that 29,077 .50, and then had a 20 handle risk on the trade, and then we pulled most of our volume off. I had to, I believe I had 4 contracts to start, and then I pulled 3 of them off at the 100 point mark, and then left a runner for potential to see if we could run through those New York highs, right? But wasn't really looking for very much more than a push through these highs here, okay? And so that was the move that we ended up taking on stream today, produced. But like I said, right after we took profit, fair value gaps filled when you start looking at like a 15, right? Looking left here on that 15, this was basically, let's move this line so it's not in our way here really quick. And let's measure this 15-minute FEG. So from this low here to this area here, you guys can see they came up and just tapped that 50% of that fair value gap of that 15-minute play. Buyers took profit, price rolls over, functionality wins, right? It's how it works. Bada bing, bada boom, okay? Now, that was the move that we gave on stream, got off stream after we delivered. And then second half of the day, I talked a lot about this here really quickly. I talked about the 4 hour demand. So I'm gonna, if you guys fix your eyes on the left screen just really quick, the left screen is gonna show you like this is the 4 hour fractal picture of the demand, right? And then when I move down and look, this is the setup that sold off, right? What I'm also looking down at is this 4 hour area, or excuse me, this 1 hour area that's in alignment with the point of interest, okay? So now when you go to 15.5 here, it comes down to first 15 minutes of the hour, last 15 minutes of the hour, and then I want to see specific price action and reactions at these points of interest. So look at the time that price comes down here, right? Price continues to fall from that after we took profit here. 29,800 failed. When I seen that price fail and we make that low, right? So 9:15 going into 9:30, price capitulates, takes the low of day, complete bearish price, right? The only thing we're looking for at that point, once it like broke this level here and like takes out that low of day, is essentially all this price right here. Okay. And so like seeing them break lower, you've got to wait for price and time, and then you have to be able to anticipate where late shorts are, where great shorts are, and where as a collective are these individuals going to take profit. Now, what I say supply demand is key is because the only way you can actually gauge these areas from a range perspective is understanding 4 hour, 1 hour daily, all the way down to 1 minute 100 tick charts. Okay. And so going back over here very quickly, look at the timing, 11:40 going into 11:45. Now, if you're in the premium Discord, you'll see live trading chat here. I talked a little bit about, I was giving out signals essentially. Look at the time, right? 11:45, 5 minute signal at point of interest on NQ at the right time, okay? So I bought this on personal accounts, right? I wanted to see if this was going to rally up, okay? And this was after our futures play that I already given out, okay? And this was like Noah said, this was a textbook play, okay? Timing, 5 minute signal, etc., bang, okay? And so 5 minute signal presented itself, 11:40, 11:45. And then I said a conservative play, right, was if you could buy below market open in bullish conditions and have a 20 handle risk. I wasn't looking for much more than obviously 5 times our risk like normal. But really what I was looking for, like on a line graph, was I was just looking for price to come up and do what it did here, which was break this high here, these 29,650s, showing me a clear break of structure and a clear sign of short covering from individuals who probably shorted those 29,850s or like at the low end of the range for sure. Okay. And so buying below the open in bullish conditions, aligning higher time frame context to find a high probable setup. Okay, that aligned with short covering. Now, the other thing I liked about the target on this was these were relatively equal tops, right? So I like to draw arrows to the future because it usually will point you to a force out candle. And as you can see here on the 15, this is also a really clean break of structure on the line graph, okay? And so what you're seeing is a lot of functionality of things, but people selling at the low end, if you're looking at that left side for a second, people selling at the low end when they could have been selling above daily, right? And then them getting, that's why you see these candles boom, 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 right? 45, what is this? 30 minutes or 45 minutes very quickly just come back up and then in 1 hour just erase all those individuals and then just scoop all their stop losses, okay? Because it's just a location thing. And so I thought this was a beautiful play. And then where my trade, what ended up happening for me is I ended up trailing, like when we broke out of this area and took that liquidity, I ended up trailing my risk to this low here, so this candle here. And then we ended up getting like a down candle, 1255 going into one, and then one going into 105. It started to show strength, and then it broke higher, right? 105 here to 105 to 110, and then I had a down candle in the uptrending market, ended up trailing the risk up to this area, was able to secure on my runner, uh, a little bit more as we continued up, and then price rolled over after breaking the structure, and I think and the individuals just started to take profit on a move like this. It was like 300 handles, and you've seen price kind of roll back over into the range. Okay, so going forward tomorrow here very quickly. Okay, going forward tomorrow, we are kind of in this choppy range. One of the things that I'm kind of focused on is going to be this key level 29,550, this demand level where they swept liquidity, and just seeing how if they're going to hold this 4 hour demand zone, or are we at a point finally where higher time frame is ready to possibly capitulate, right? Fall out, right? And this area actually just fall out, dollar just balls out and goes strong. As of right now, it kind of looks like dollar wants to fall still to that 100, and it seems like U.S. oil is very strong. So like we'll see if oil can really get a nice pop. Possibly we could get that nice drop through back down into like this 4 hour demand. So quickly as well, what I'm thinking about is this 4 hour area, and I'm thinking everywhere below these previous day lows, like from yesterday's, like down in here. So 29,000 flat up to 29,200. If price rolls over into that demand, you can almost bet most likely individuals, once it breaks a previous day low like that, like those that go through those lows, they'll try to sell down, into the demand, and then they get rocked. And sometimes it goes lower again, or sometimes they actually um, yeah, sometimes they just do that and it'll come back and stop them out. Or sometimes, like I said, it'll just come down into this area form and then just go back and start to fill inefficiencies on the way down. Okay, but I don't predict the markets. I don't try to. I hope this helps kind of like see what we were wanting to see or what we ended up taking in the Discord, and then what we ended up playing on smaller volume CFD swing trades in the afternoon. Okay, so appreciate you guys watching. Have a good rest of your night. I'll talk to you soon. See you in the morning.